Leeds Building Society have announced their Income Plus range, which can provide lending up to 95% loan to value and potentially up to £66,000 more in terms of a mortgage loan. So this is pulled from the email update I received today. They're saying the Income Plus products align with their enhanced but responsible affordability model that features several improved elements. With an LTI, so loan to income of 5.5, your clients with a minimum of £40,000 household income may be able to borrow up to £66,000 more on average without the need to save for a larger deposit. This is just their way to try to say yes to more first-time buyers. But what is the lending criteria to be able to be considered for this type of mortgage? Let's have a look right now. For their Income Plus range, they only provide 5-year fixed rate products. To be considered, if you've owned a property before, you cannot have had a mortgage for at least 3 years to be considered as a first-time buyer for mortgage product purposes with Leeds Building Society. As of the 5th of December 2024, so you've got a 75% loan to value at 4.4%, 80% at 4.54, 85% at 4.64 and 4.74. One has a product fee and one doesn't. And then you've got a 90% at 4.95% and a 95% loan to value mortgage at 5.19%. They've also got an Income Plus cashback product, which is a 5-year fixed at 5.15%. But remember, all of these products are 5-year fixed rate mortgages only. If you try to get a first time buyer mortgage on a 2-year product, you won't qualify for their Income Plus range if you need it. So my thoughts on this is it can work for the right type of clientele. Now, firstly, if you're a first time buyer and you can definitely commit to 5 years at this property, definitely you're going to be there for the next 5 years, it could work if you can't get a mortgage loan elsewhere. Because remember, for a lot of first time buyers, that's their first property purchase. So if you can't commit for the next 5 years at this property, is it worth it? Because a lot of people, for example, need to sell to buy their next property. And if you are reliant on the sale of your home to buy the next property, then you're reliant on releasing the equity from your current home. Now, you may not be able to borrow that additional amount with Leeds Building Society because every lender has a different lending criteria and every lender assesses income different ways and provides different loan amounts. So the main thing here is you're trying to avoid any early repayment penalties, because if you do decide to move within the 5-year fixed rate period, and you can't borrow the additional higher loan that you need to buy that new property that you want, assuming you need a higher loan for that new property, then you're going to need to pay the early repayment penalty because another lender may be offering you the loan amount that you require. However, on the flip side, if this is going to be your forever home and you're not going to move and you can't get the mortgage loan elsewhere because you do need that Income Plus, so that big income boost, then it could work. Remember, always seek advice from a broker or speak to your bank's broker to make sure that you meet eligibility and criteria for this product, because Leeds Building Society, on top of the criteria requirements we've told you here, will have further lending criteria that you need to meet to be able to get this mortgage loan with them. I hope this video has helped, and I'll see you on the next one.